Okay, folks, what we're looking at here is a live intraday shot of Google. And I have a few different time frames that I'm watching here, and let me make a couple adjustments on these charts here because we want to keep an eye on the SPY at the same time that we're trading this Google trade. And as it stands right now, we opened up a couple 677.50 calls on Google that expire next week, and we were scaling into that position when we caught the back test of this 668 level. So we got in a little bit earlier than what I ideally would have liked, but that's the whole methodology behind scaling into a position, is that you're not going to always catch the absolute bottom, and if you're always trying to do that, you're going to end up driving yourself batty. So what we try to do here is we use a scaling approach to entering these types of intraday positions, whereas we take an initial entry and our initial entry is generally our smallest entry to kind of test the waters, so to say. And from there, what we'll do is we plan our total position size, whether that be based on our max capital risk or where we're at in terms of how much we're willing to allocate to that specific position, and we do that based on, our, like I said, our capital risk, and we would determine so, but with our contract size. So. Right now we're keeping the trade small. It is option expiration Friday, so we're not too sure what market makers may try to do here. So we're gonna keep our position size down to 5 contracts. I've already entered 2 of them, and what we generally like to do is we like to save that last entry for our largest entries, so that when it comes down to our total cost basis, it essentially will give us our lowest cost basis at that point. So let's just take a quick glance at the options chain here, and I'm going to drag this thing down, and as you can see, we have a position open here, and the current bid and ask on the 677.50 calls is 450 by 520. So let's take a real quick glance at what it was that I was specifically looking at when we entered into this position. And what I got here is I got our 5-minute chart, and I'm going to go ahead and I'm going to expand this really quick so we can get a full view of what's going on here. So the first thing that I was looking at when I entered this, my second entry here on this bounce, my first entry was actually at the 668 level before it failed around this point. And when I entered that, we dipped below it, and we ended up dropping down around here. Now, the reason why I took my second entry at this level, and I took that at about 450, my first entry is at about $6, so my total cost basis at this point is 525, so I'm technically upside down in this position currently. But the one thing that I wanted to showcase here specifically and why we took this position is that I was looking at the price action that we got here at the very beginning of the day, the first 15 minutes of open. You'd be surprised at how valuable the information is, and the price action that occurs at that first 15 minutes of open can potentially be for you as a trader in terms of determining specific levels, particularly when it comes down to intraday pivot support and intraday pivot resistance. So we've talked in past tutorials in regards to how to trade our opening range breakouts. So if you notice here, this green dash line right here is our opening range high, the red dash line at the bottom is our opening range low, and then this yellow area in between is our opening range itself. So the one thing that I was looking at here is when we established this opening range, we saw the reversal at about this 662 level, and from there we ended up retaking the 664.60 pivot support, which goes back to August 5th, and it was a breakout from then, and then that's when we saw the breakout when we reached the high a day mid-morning. So with that data in mind, what we wanted to do is we wanted to determine, okay, where did this breakout actually occur here? 665 was really, the level that I'm looking at here. So in terms of my scaling strategy, my first entry was with the intent of with the expectation that the price would bounce off of the 668 level. So that was my first light entry, which did not happen. So the second entry actually was at this level, which was our intraday breakout level at about that 666 point. If you see here, this is where we actually ended up getting this bounce. So that was going to be my second entry, and it was my second entry, which I ended up entering in there at about that 425 or 450. I'm sorry, on those 670, 750 calls. And then my final entry, which would have been for my last 3 contracts to round out that overall position size, would have been on the 665 area with a stop just below the opening range low, because I knew that if we were, I didn't know, but I had the expectation that if we did break down below this opening range low, that our next target would be about that 660 level, and that's a little bit more risk than I'm willing to stomach at the current moment. So the plan here was keeping a $2 risk threshold on that position after averaging down, which was what was on the agenda. So, but as it stands right now, like I had mentioned, we caught this breakout here at this, this reversal here at the 666 area, and it retook our 668 resistance. Now, the one thing to keep in mind when we're looking at these intraday levels is that what happens is when we break down below a support, that support then becomes resistance. So one way to kind of think about this in terms of a nice analogy would be thinking about an apartment building. And when you are in a multi-level apartment building, you have a floor and a ceiling, and your ceiling acts as the floor for the apartment above you. So the way you kind of have to look at this is that if you climb up on a ladder to your ceiling and punch a hole through it, and then climb through that hole, where do you end up? Well, you end up on the floor of the apartment above you. So support and resistance works the same way, in the sense that when we get a breakout above a resistance level, that resistance level now acts as support. So you can imagine these levels here acting as essentially various apartments within a multi-level apartment building. So what we saw was tagging an intraday support here based on this breakout from the first 15 minutes of market open, and we reversed at that support, and now we retook the 668 resistance, which is now acting as support. So assuming we hold the 668 resistance, which I'm not sure it's going to do, then our next target to the upside is going to be our opening range high, which is around that 669 area, and then if we break out above that, then 671 will be the next resistance above there, with the opening range high acting as our support. So there's a quick glance as far as a intraday trading strategy, trading pivots on support and resistance levels from an intraday perspective. Now keep in mind, if you're looking at a longer time frame, what we can do is we can kind of take the similar approach and look at an expanded time frame in regards to our charts. So what we have here is a 78-minute chart, which for all intents and purposes acts as an hourly. It's just that this breaks up the day in even sections. So what we're looking at here in this instance, let's break this down a little bit. We saw a pretty solid breakout above the 665 level, just as we were showing in our 5-minute chart, and went ahead and retook the 668, and then that led us up to this 670, 192 or 672 if you want to hit some round numbers. Now you can see here is that once we broke down below that 670, 192, we came back to test the 668 support. We dipped below, and now it's kind of teetering on the edge there, and so the question is that are we going to break below 668 support and come back down to the 665 area? We don't know. So these are the things that make this a little bit difficult in regard to not always knowing necessarily the direction, but when you have an edge in regards to understanding the price levels that you're looking for, it does make things a little bit easier for you in regards to where you're looking at entering, exiting, where you're placing your stops, etc. So if we're looking at this from a swing time frame, of course, if we're trading options, we're going to want to go out a little bit further. We're going to want to maybe take the the 4th week of October calls if we're bullish on this trade, and buy a little bit of that extra time, because timing and direction are probably two of the most difficult things to determine when trading the stock market, while these price levels are a little bit easier because they're pretty much defined for you. So that's about what we have today, and keep an eye out for more of these live trading tutorials, and if you're not already a member of 360 TradingView, we definitely encourage you to check us out. Check out the chat room. We have a lot of really fantastic traders in the room. One of the biggest things for us, one of the most important aspects of our service, is utmost and utter transparency. So as you can see here, considering this is a live trading scenario, this is, we're really taking these trades. These are the actual positions. Here, I'll even show you what my P&L looks like on this one specifically. So as you can see, we're down $90 on 2 contracts. So we're not trading large here. Like I said before, in regards to the explanation of the initial strategy, is that I hadn't placed the last 3 contracts of the entry. And if it looks like we're getting a little bit more downside here in regards to the SPY, let's take a quick glance at that really quick. Then we may just forego that last entry and save ourselves the hassle and just stop out of the position. So it's safer. I shouldn't say safer, but it's less psychological. There's less psychological turmoil involved in regards to taking these trades. And if you're chasing a losing trade, it's generally not good for your psyche. So what we normally like to do is just stop out, reassess the trade strategy, and then look to approach things from a different angle if need be. So and that wraps things up for us.